Hey everyone, it's Ryan Anderson with Lamaki Realty, here to talk to you about this week's topic about appreciation and depreciation of home values in 2020. So I have some kind of good news, kind of bad news. It depends on how you look at it. So with the housing market staggered to some degree by the health crisis that's going on right now, the price of any item is determined by its supply and its demand. So each month, the National Association of Realtors surveys over 50,000 real estate practitioners about their expectations for home sales, prices, and market conditions for what's called the Realtors Confidence Index. Their latest edition sheds some interesting light on the relationship between buyer and seller demand, traffic, supply, however you want to call it. It's all boils down to supply and demand. First, buyer demand. If you look at this map right here, it shows the buyer traffic for all the different portals that are out there and available in the consumer marketplace right now. And if you look across the nation, most of the state is in a dark or light blue shade. So what does that mean? So you have your dark blue, that means a strong buyer market. That means there's buyers out there actively looking for homes. They're actively going to see homes, because that's another important one as well. And they are searching for their next place. And now if you look at this one, it's the seller traffic index. And it paints a completely different picture from what the buyer traffic index just showed us. And seller traffic across the nation is gray. And what that means is it is a weak inventory market right now. And there's not a lot of homes available for sale. And that creates a problem for buyers. And that is also a double-edged good sword. So because this means that there are fewer homes on the market than what is needed to satisfy the needs of the buyers looking for homes right now, demand will stay strong and home values likely will not depreciate. Here's what happened, guys. We started in February. We went into the spring market with an already low inventory. We had exponentially more buyers than we had homes available for sale. And it was already a very competitive market. And then the world stopped. At least in Massachusetts it did. And we didn't know how things were going to proceed. We didn't know how we should proceed. And while we worked to figure out how to show homes safely and how to market homes safely during COVID, the demand remained the same. Real estate transactions still continued on for the most part, but buyer demand didn't decrease because people pulled their houses off the market because with all that's going on, they didn't want strangers coming into their homes. I don't blame them. They didn't want to deal with not knowing who was walking through their house without the guarantee that that person was going to most likely be buying their home. And it's been kind of interesting because, like, if you look at all the graphs and all the data, you have buyer traffic, boom, March happened. And now if you look at things again, like on websites like Showing Time or Realtor or Zillow or whoever you want to use for your tracking platform, like you start to see data start going like this, and it's starting to take off. It's almost up at a straight line. Buyers are coming back to the market. And right now, I gotta say, it doesn't look like home values are gonna depreciate because of everything that's going on. And if anything, the housing market's probably gonna be what starts turning around our economy right now. Because provided that we keep our social distance, that we don't have a continuing set of waves of small little like epicenters of COVID. And so let's think about what some of I'm a realtor. I'm not a finance expert. I'm not a mortgage broker. I help you find the home and I help you negotiate the home sale and I help you find what it is that you're looking for. So let's turn to some of the economists and some of the experts in the field and actually see what they have to say about it. So Mark Fleming, chief economist from First American, says that housing supply remains at historic low levels, so house price growth is likely to slow, but it's not likely to go negative. So what does that mean? You have your upward curve, and it probably is going to level off a little bit, but if you notice, it's still going up. It's still going up, and it's not likely going to tank. That was Mark Fleming, the chief economist from First American. Freddie Mac put out in a statement that two forces prevent a collapse in house prices. First, as they indicated earlier in a research report, U.S. housing markets faced a large supply deficit. Second, population growth and pent-up household formations provide a tailwind to housing demand. So what that means, bottom line, looking at these maps, listening to the experts, it seems that housing prices will remain stable. If you're thinking about selling your home, drop a comment down below with your email, subscribe to my channel. I'll get in touch with you and we'll figure out a strategy to help sell your home safely.